Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 index. We'll start with the weekly Ichimoku cloud here. We can see in the last update where we're hitting the top end resistance zone. Let me just zoom in there. You can see here 4157. That's the front end cloud chart resistance zone. Very close to 4339, 4289 and 4175. So 4175 was taken out, 4157 was taken out. Market reversed lower because this resistance zone, this front end cloud level, as well as these old turning line, standard line of the cloud, and the bottom end of the cloud, these old cloud chart resistance levels held up. So these were pretty strong resistance zones. For the market to be bullish, we need to break out past these resistance levels on the weekly Ichimoku. So the weekly Ichimoku cloud is still bearish from a cloud chart trading perspective. Now the market sliced through the bottom end cloud chart support level, lost support at the 4068 zone, and now it looked like it found support there at the turning line of the cloud, the little green one there. Will be critical to see if that support level holds. If that level holds, we'll make another attempt at the resistance at 4068 and 4157. If that support fails, then we're going to hit back down to the front end cloud chart support levels, this 3988, 3835, and you can see that's where the standard line of the cloud as well is. So watch out for 3835 is a downside risk target in the current correction, and the top end cloud chart resistance levels 4157 and 4068. These levels are still valid. Now if we look at the daily Ichimoku, you can see we had a nice rally here from this cloud chart support level, a beautiful swing trade all the way up through the cloud chart resistance at the front end of the cloud, rebounded from the turning line of the cloud, another strong rally, and by this time we hit that major resistance zones of the cloud, 4173 and 4157. We got that off the weekly Ichimoku cloud, and in this case you can also see where that resistance comes from. It's the top end of this cloud chart level, the old cloud chart shadow. With cloud chart shadows, we look at the back previous highs and lows from the cloud to see where these support and resistance levels are. So that's quite a significant level both on the daily and the weekly. The market then sold off, corrected, sliced through the front end cloud chart support level of 4068, and now you can see there's another line in the sand on the daily to watch out for. It's this front support zone. 3980 is a front cloud support level, 3932, and then the bottom end of the cloud here, 3920, and then an ultimate low here for a cloud support zone is this line here, 3796. So these are the downside risk targets. Now, as long as price action stays above the daily cloud, this cloud chart level here, the rally's okay. It's a confirmed bull rally on the daily Ichimoku, but as soon as we dip below the bottom end of the cloud, the outlook will change to bearish. So this is a consolidation move back down to the top end cloud chart to test support. So watch out for 3980, 3932, and this bottom 3920 zones to be tested for a potential rebound from the cloud. If we slice through the support levels, then we're definitely going lower, and then 3796 is the downside cloud chart levels to watch out for, as well as this line in the sand, this one together with that cloud level there. So 3738 is the downside risk targets on the daily. Now on the 4-hour Ichimoku, if we just look at that, 4 hours, you can see how they ran into resistance. Beautiful reversal candle, indecisive, kind of a spinning top. And then another one as the market struggled, sold off, tried to rebound from the standard line, back up to resistance, didn't get through. And then after the third attempt, you can see 1, 2, 3, third major attempt, the taps just opened and is now testing this 4000 zone for support. It's 3980 we know we get from the daily, and 3933 is the front cloud support zone here. So watch out for these levels on the 4 hour, with downside risk to 3835 on the 4 hour. Now it's vital that we stay above this bottom end line. If we dip below this bottom end cloud chart support level, then the outlook on the 4 hour will change back to bearish from bullish. So looking for a potential rebound back from this level if support comes into the top end of the front end of the cloud, that resistance zone there. So that's the upside potential. The downside risk if support fails here will be this 3933 and then this level here of 3835 on the 4 hour. Now, something else that's interesting on a weekly Ichimoku cloud, if we look back at the 2008 market correction, we also had that cloud cross to the downside, confirms the bear market, and then those tests back up to the resistance levels at the bottom end of the cloud. You can see how the front end of the cloud in this case became a major resistance zone. So we're busy with a similar type pattern where it tested the cloud, ran into trouble at the bottom of the cloud, and then sliced through a major support zone from the cloud. So it's going to be interesting to see if we're busy in that kind of process with the S&P, for example, similar to 2008 correction, that we are now heading towards a cliff for another bigger drop in the market. So if we go back and look at this price action, and we go look back where we are now, we can see that we are now still struggling with that front cloud resistance level, and the big downside risk is if we slice through 3.6 and 3.5 to the downside, we might be in for a major drop down to these levels of the cloud here at 2.9 and 2.7. So it's similar, kind of get the feel as to what's happening in the 2008 correction, somewhat playing itself out in the 2023 correction, 22-23 correction in the market. So very similar kind of type price patterns. Now, interestingly enough, if we're going to look at the 2000 correction, the S&P also had those three peaks of touching and then breaking that trend line. If you draw a trend line from there through, ran into trouble the front end cloud chart resistance levels, and then the big drop came soon after, losing support at these old cloud chart support levels. So then it just sliced open. So from a cloud chart perspective in the S&P, we might or might not be halfway through a major market correction. If we just look at two of the historical corrections out there from a cloud chart perspective. So that's kind of a risk factor to bear in mind, that if we start slicing through these cloud chart levels, these major cloud chart levels, then there's significant downside in this market. And if we look at the monthly Ichimoku as well, there we go. You can see that 3506 is a major support zone. So this correction can still slice through there and hit the 3000 and these to 8000. That's the big picture, really big picture downside risk factor in the market. But for the immediate swing trades, we're looking for swing trade opportunities from these top end cloud chart support levels to the upside. And if the support fails, then we'll be looking at short selling to the downside to these downside risk targets. Until next time, happy cloud chart trading. Bye for now.